Morning, my friends, and welcome to the Breakfast Club. My name's Darren. My name's Darren, and we're
Thursday,
here for
the
Thursday, the
March.
28th. We're looking at the
We're looking at the
dollar index right now. Looks like some you on Telegram are doing well. This morning, which is great. We've got a reversal pattern happening there on the hourly in Dixie. Just make sure I'm up and running here. For some reason my video is I can't seem to get my video working again. I had to turn it off yesterday and put on the I had to do another video conference the other day. Yesterday. For some reason I can't get it working. Video capturing device is working. But you don't get to see my mug today. That's fine. You don't need to see my face today. Let's start over here. Yes, we're consolidating, come back up inside this fair value gap. We seem to have hit that quite well. The SIBI there is filled on the 15-minute. Let's look for the 1 hour. So right now you're looking for a reversal to get back down into this range here, order block, and hopefully dig back down in here. If not, we're going to take out those highs, go higher. Look for the mean threshold of that candle there. The whole price is bouncing off of it now, so you'd want to see a significant fair value gap forming in here first, preferably above this high. Come back inside and then continue dropping down. Or if that mean threshold holds, you got a little imbalance that's happening here right now. Let me just make this bigger. You want to trade below that, come back inside this, continue back down inside that range. You have the reversal there. Right here. You don't get it here. Body trades through your going, if you're going to go short right at this point here, and it traded back against you, and your entry was right there, and it traded above you, and you go, oops. As soon as it comes back, opens, gives you an opportunity to break free. There's your fail safe there, and go long. If that's a strategy you want to use to go long, then you'd be well into a good trade there. Nothing says this is going bearish yet. You're still bullish. Look for the rejection block up high. See how you react off of that, and then whether or not you push the new high. And if you do take out the new high, look for the possibility of a swing point. Dixie's finally hit that area we were talking about the other day. The imbalance, it's bounced off that quite nicely, and we've really had a nice strong reaction off of that. On the 1 hour, you have your reaction off that high. Here's your reversal. You haven't been able to get back in it. You have one candle that drives through both. So that's the other theory we're kind of playing with. So 1%, you got small amount of leverage in here because you're in a discount portion of that range there. If you prefer premiums, wait till it gets all the way back up there. If it doesn't, then and it just keys off of here like it is right here. If it closes below that, comes back inside it. You have 1, 2, 3 entries there, and 1, 2, 3 entries there for these lows to get taken. Revisit back into this breaker or this Gap. On the 15-minute, that reversal you can see right here. Body breaks below it right here. Trade back inside it, and you're getting short. So sometimes you can't catch them on the 1 hour, but the lower time frames, you certainly can. And the 1 minute, if we go back to the 1 minute, that's the reversal. Body trades below it. You're up inside it. Your stop loss may have got taken right there. But once it trades below it again, comes back inside. That supports price. You're back up inside it here, and you're going short. So if we continue down, we've got upward pressure now on all your Forex pairs. We've run down to the rejection block here. Kicked off of that. Look for this Sibut above you here. You have an inversion right here. Draw this out in time. Look to get on the other side of that. If you can get on the other side, get into this breaker or this Sibut here. Look to get up inside that breaker on the daily or for the rest of the week. This is the reversal pattern here. Body breaks up above it. You get one opportunity right there to get in. If you took it 2 hours ago, you're in a killer trade right now on the 1 hour. 15-minute. Body goes above. You don't get an opportunity to get in on that one. And the 1 minute, body breaks above it here, and you don't get an opportunity. So strangely enough, we saw one that you couldn't see it on the hourly, but you could get in on the 15-minute, and you can't get on the 1 minute or the 15-minute for the, but you can on the hourly. That's interesting, right there. So what do you have to do? Usually if you have a breaker and you trade above the breaker and trade back inside the breaker, you get long. So you could get that one there. If that's a swing low there, look for a return into, yeah, I guess you could down those if you played the breaker rule. If you couldn't get in on the main inversion, then you can get in on the breaker. Seems to be a good backup. We traded all the way back into this breaker right here. And now we've snapped off of that. You're looking to get back up on top of that daily fair value gap now. Unless they start pushing back down again and that American dollar starts running back up to that imbalance. Just keep your eyes on the inversions. So if you're looking for a swing low, looking for the inversion, there's your inversion there. So if you return back into this here and here, if it fails at that point, comes back to it, you can break even before taking your stop on the 1 hour. Turn this thing off. If you break above here, if you break below that, come back into it, look for that as a return back down into here. Your opportunity to get in short there. Look for it after here. And you're trading from this one to this one, because that's the place you're looking to get long on. Look at all that Canadian dollar just engineering a ton of liquidity out there. You see that? Look at all that up there. That's craziness. Once again, they bounced right off of that They're pulling right back down into that daily fair value gap again. You want to see get a reaction off that and then start pushing back up again. So if that happens, then we might be just coming back down to the bottom of this fair value gap and then start running back up inside it again, back into that smaller range. So keep your eye on your inversions. It's a really choppy market to be in right now. So you got to be super sniping down at the lower time frames if you want to get anything out of this. Probably best just to sit back and wait for clearer days ahead. But if you're quick and you can catch those runs back into inversions, trade them from one inversion to the next inversion, get out. Like, you got to be super nimble to be in this market right now. It's just choppy like crazy. New Zealand dollar still going deeper. Takes out its highs. There's your inversion. If you don't catch that, take the breaker. You catch the breaker once you close below it right here. Trade back up into it, get short. And you got to be nimble. You got to be quick to get out. So if the American dollar is going down, this should start coming back up. So that is in the opposite direction to what it typically runs in. Rejection block. Back into that inversion again. I got nothing for you on this one. Look for the mean threshold of that candle to hold price. If you close below it, then we're going even further. Then Australian dollars finally going to follow its New Zealand dollar down. Yeah, this mean threshold and this one are relatively the same. So you want to see that hold price and start to climb out of there. Otherwise, you stay bullish until you see something on the upside, which is right here. There's your inversion. You come back inside it. Stop losses here. You're running for higher prices. Look for here and this fair value gap to fill here. On the 1 hour, what was that, 15 minute, 1 hour, 1 minute. You have no body below this yet, so there's no reversal. You're still going bullish. If you get a reversal on that, back inside it, you want to go short, close off your longs. Unless you have a higher objective that you're trading off of, then I'm just talking about everything from a 1 minute perspective. And remember, you all take your own chances with your own money. This is just, I'm not giving financial advice, I'm just pointing out some key levels for you guys to key off of. Focus on your trade, don't focus on your money. Focus on your trade. Focus on your trade setup and execute your plan. The money will come. If your focus is on how much money you're making, you're missing out on the idea of trading. You trade your plan and you execute your plan correctly, and you'll have that other stuff. Those demo dollars will start rolling in. What the hell happened to my camera? So look for your setup right here. See the body, we finally have it. We swung below a low. took out that low back inside that little inversion that we looked up there on the daily. Time and price. You come back up above, you break above it, you wait for it to trade back into it. It does right here, and that's where you go long. And you use whatever method you guys want to use to be in something like that. But they are available to you. You just have to know what to look for, that's all. The reversal. Body trades below it right here. You open actually below it, then trade back up into it, get short, look for these lows here, and look for that breaker here. Go right back into the breaker. You come all the way back up, you get another opportunity to go short, back into the breaker. You come back up inside this order block now. It becomes a breaker. So breaker to breaker. Ran all the way through all that. They're just clean. They look clean enough to me anyway. Going from array to array, array to array, array to array, array, and this is just back and forth. Premium to discount. Coming right back up into a premium logical level. Premium to discount, come back up into a higher logical level. Premium to discount, come back up into a higher level again. Premium to discount, and now you're looking for this to come back up into this higher or back into this breaker. Is that a breaker? This one's a breaker. Oh, here's a good example. So if you swung below, if you took a long here, because you see this reverse, the body goes above it, you come back inside it right here, and the body now goes boop, and it closes below or opens below it. You go, that's not good. Fail safe. Says as soon as it comes back into that range, you close your trade, you get out. Because if you're going to go long, you're on the wrong side of this. Turns around, continues back down. That is a key level to really watch right here. That's why you put, when you want to go long in your trade, you want to put your entry in right at the very bottom. So if you get it, if you went right off at the top, then you're going to take a loss from here to here if you get out right there on that spot. If you wait for it to come back to you, you would have had an opportunity to get your full trade out. If you followed the rule that you trade it, as soon as it trades below it on a close or an open, you're done. Again, if you got greedy in that candle, said, oh, okay, I was right, it is going higher, and it slammed against you, don't blame the algo. Don't blame the setup. You just didn't follow the rule. So that one went to A267. A267, they're equal highs. That's crude oil. Looking for, we just hit that rejection block just up there. So when you hit these key levels on the higher time frames, look for a reversal pattern. If you don't see it, it continues to the upside. Stay in the trend until you see a reversal. Then when you see a reversal, look for what range are you in, what discount array can I quickly reach into to grab some profits, either for the daily or whatever. Gold is continuing higher. Don't have any much, I don't see much of a setup other than this rejection. Sorry, not rejection, this imbalance right here on the daily. If you come back into CAM model 1, right to the bodies, CAM model 2 will put you right in the middle of that order block breaker. You've broken that high now, so this becomes a senior array. If you do dip down into CAM model 1 and 2, if you lose the mean threshold on that candle on a close, you're out. That's daily though. look for opportunities now for short-term lows to get taken out to go long. Just get back in sync with that trend. If not, you're going to remain bullish until something new arrives in the market. There's your inversion right there. Body trades below it. We talked about that a couple of days ago. Traded back up inside it. Perfect opportunity to get short. Did you take it? It's up to you. If you took it, then you're definitely inside this order block. As of yesterday, mean threshold, and you made 2 days worth of, well, at least 1 day's worth of, yeah, right to the mean threshold. That whole day right there was all profit for you. In silver, we called this one back to the old highs. It's just going sideways now. We've returned back to this palladium here, and we're looking for upside, and it's come all the way back down, filled that in nicely, and now we're looking for upside. So palladium's worked out just the way we expected it to. And what do we got here? You don't like those. I'll tell you, Bitcoin, if you want a market that's actually showing you some beautiful setups and it's clean. I know people say Bitcoin's all over the place, but I see nothing but really clean setups for longs and shorts. There's some really nice turns. Looking at this block down here. So yesterday we're looking for a run back into that rejection. Sorry, I keep saying rejection block. That gap right here. Upside gap. Trading back into breaker. So keep your eye on that spot there. Rejection block. Tight range. Coffee. Got nothing there. Consolidation, break below, come back into CAM Model 1 for a continuation on the downside. If you lose 50% of the consolidation to the upside, look for this to be just a manipulation leg to go higher. Coca still heading up. Lumbar retreating back into that. We talked about this old high here yesterday. And this gap being filled, so it looks like we're coming back for a fill of it now. And lean biggies, got nothing for you in there. Okay, well that took me in. I've been waiting for CAM 3 model up here, so that's my CAM 3. On the Telegram, I was calling for a CAM 3. This was a nice little trade off of this entry here, this breaker, and I think Mike caught that nice little off the breaker trade, and then we had a beautiful run down into here. I had literally had my entry sitting right there, and it came down, tapped me twice, but did not put me in. I was running off this little tiny imbalance you see right here. I had entries in there. You'll see it on our Telegram channel. I literally had my entries right there, and my exit was going to be up here right at my CAM model, and it literally tapped me twice but did not put me in. How's that for precision? The spread kept me out. I did not incorporate the spread, and therefore did not get in the trade. Sometimes you could be too precise, hey? And look at that, would have ran right to my exit and my CAM Model 3. And CAM Model 3 here is just simply this price leg, 50% of the price leg, and it's also that reversal pattern again, and I wanted the top of it, so if it failed, then I'd get out. So you pull your Fibby tool. There's several different ways you can manage this on the way down. I'll stick it above that high. I'm not managing this the way I'd like to right now. I should have managed it like this. Oh well, it's gone now. I should have managed it like this, taking out portion here, portion here, portion here, portion here, portion there, and my stop would have been taken right there on my fib tool. So as it was, I let it drag too far because I was too busy talking about my other thing, and I really didn't follow my plan. But that's my plan, trading a fib tool on the way down. You just simply drag your fib tool from, as soon as you get to 50%, you break even. 50, as you get to 62, move to 50. And that little run down here would have been just bump down. As soon as it takes out the 70, you move it to 62. If it continues down to 75, move it to 70. And then eventually it'll get so close that as soon as it bumps back and takes you out, you've really maximized your profits. Or you leave your stop loss way up there and you expect it to come down even deeper into here. But because the markets are so crazy right now, look at this, just choppy like crazy. Like, who wants to be in that? You just maximize, steal some money out of the market as quick as you can. Because when the cleaner days come, you're going to see a much better setups. These are just a quick way to take some money out of the market. Okay, let's say hello to everybody. Good morning, Thomas. Good morning, Christian. Fernando, good morning, my friend. Invest, good morning. They just beat selling rips up bad this morning. Good afternoon, guys. Paul Ingram, good morning, good afternoon. I guess over there it's afternoon, isn't it? Morning all. A big sale is coming, not sure what day. Mohammed, good morning. Mike, good morning. Barry, off to a meeting, see ya. Volume seems a little low today, brother. Yeah, sorry about that. It should be a little better now. Good morning, good evening, Henry. And good morning, Keith. Or Kenneth. Cap Nemo. G'day. Henry from Bangkok, Thailand. We're coming to Thailand. I'm coming to Thailand this year. Bangkok. Oh, we're actually going to be there. That's awesome, Henry. I'll have to meet up with you there, Henry. First time joining the live stream. Excited to learn. Wow, excellent. Welcome. Welcome, welcome. For some reason, I still can't get my camera working again. I turned it off to go on a live stream yesterday, and now I can't get it back on. So I have no idea. Sorry. Not that you want to see my mug, but choppy, so you just wait for something cleaner to set up. See the swing above this high? See that little imbalance right there? Body trades below it. If you can get back into it, like this thing here. I want to get back into it. You get back into it. You get back into it right here. It comes all the way back up. Now, if you get short right there, you're looking for rejection block. Pay yourself at those rejection blocks, folks. Pay yourself. So if this one slams all the way down and gives you your rejection block, pay yourself. And then if it comes back up in there one more time, and it was literally close, but you didn't get it a second time. I was catching a couple of really buffer trades this morning. I was buffering in here. So I would build a buffer. So I would trade short, come back to me, trade short again, it would come back to me, and then it finally went through me. But it was, I can't remember where the heck it was. But they helped build up a little buffer for a couple of little losses I was making. Trying to take some crazy entries. But that would have been beautiful had I caught that one. It would have been a nice little perfect entry to exit. So now we're just sitting here waiting for in 1 minute, the open to happen. Ideally, I'd like to see this head down. Oh, wait. Did I get in there? There's the open. We wanted to go down. Down she be. Come on down. Good morning, Chris. Don't worry about this, Simo. You're focusing more on your money than you are on the trade. It's great that you made 125 bucks, man. That's awesome. Your goal should be to make sure your trade execution works out just the way you want it to. Focus on the trade. The money will come. Well, I was expecting a downward run, but holy smokes, that's a nice little slammer. Well, I got my high. I was looking for this high on Telegram. You see me put my high range expecting the upside, and we got the upside. Now the downside, I'm expecting this to push through here now. Look for this 4-hour fair value gap to give way. It's a mitigation block, so it should give way. We'll just watch. I'd like to see it just come tearing right through it and start really pushing for lower prices now. There's the fair value gap fill. So if these are key levels you're looking for a reversal to happen now. If not, you remain bearish. That's that classic CAM Model 3 that I was telling you about. I was trying to find a good example for you. You have your consolidation like this. You finally break below it. You come back up into it. CAM Model 1. They make their profits here and here and here, or they go from CAM model to CAM model and they get out at the next CAM model. If it runs them back out, you look for your reversal. And then you wait. And if you get all the way back up into this range again, and you take 50% of that leg right here. That takes out the high. Draw it across. And there you have it. There's your 50%. And that's a CAM Model 3. And ba-boom. Ba-boom. I only made it to here somewhere. I think I think I made it to there, but boom is there. But anyway, that's your CAM Model 3. Consolidation. You gotta be quick. If you see something and you want to take some money out, don't feel bad if it takes a dive on you, man. Just take your money and move to the sidelines. It is super choppy out here. This reminds me of Roadhouse, that new movie Roadhouse with Jake Gyllenhaal in it. And that guy's on the boat, and he's out in choppy water, and he's got this bartender trying to shave his face with a straight razor on a boat that's out in choppy water. And the guy keeps nicking his face, and he's not blaming the barber, because the captain says it's going to be smooth sailing. So he decides to he's like, okay, man, just focus. The captain's promised me it'd be smooth sailing, and he's eyeballing the captain, and this poor barber keeps nicking his neck, and it's hilarious. And then all of a sudden, you think he finally cuts him really good, and actually, you have to watch the movie. It's funny. That's kind of like what we're in right now. We're trying to shave with a straight razor in a very bumpy world. That was the point of my story. Looks like some news at 10:45. See the body traded above it right there. See how it just pops above it? Zip, you're inside it. Now you're going long. So for me, I'm bullish right now. So because it's super choppy, you'd want to enter like way down here. And you wouldn't want to do a 5, you want to do a 1. If you're wrong, you try to get out of your trade as quick as you can. Stop loss will go down here. If it comes to me, great. If it goes through me and closes, comes back, I'll break even, get out. If you use my fail-safe, those of you who are going long from that point on, you slam your stuff up to break even as soon as you can. Like right there, I'd move to break even and let the trade run. And if it keeps going, pull your fib tool, start paying yourself on the way up. And if it comes back to you, you get to play it all over again. And you got some money in your pocket. That's buffering for me. It's my definition of buffering. It's not Michael's. You get to buffer, so you get to, any losses that it comes back through you here, because you keep trying to get on, you're just offsetting any losses you may take if it rips back against you. So right now you've just cleaned up all the way back up there. But that was the entry. I didn't want that high. I wanted the better opportunity down there. Didn't get it, but you saw the reversal happen in there. So you're back into the breaker again. Right there, mean threshold, snapping off of it. If it drives right through it, then you start to go, that's interesting. If it drives through that now and comes back to it, then you get some support. Look for further upside prices. We've come back into that fair value gap. We've filled it perfectly right here. We filled the 1 hour all the way down, and now there's the potential, if we get through this mean threshold, and this isn't just randomness, you guys, that's precision, and then the retracement is like perfect data points. So now you want to see, does it want to push all the way through this? looks like some news. I use another entry in 30 seconds. Good morning. Headed closer to your neck of the woods in June. Going to the Boundary Waters in Minnesota with a group of scouts. Ooh, neat. Excellent. Spartanberry, I took that Cam 3 example this morning. You took it as well? Good for you. Now, did you have your trade plan set up? Like, I like the fact that, you know, if you guys have successful trades, those, you know, I'm happy for you. If you're focusing on your money, you know, I'm happy for you, but I'm more happy for you if you actually have a trade plan that executed and the money is the sideline thing. If you make money on this stuff, that's great, but you really got to focus on your trade plan. If your trade plan pans out, I'm more interested to congratulate you on that than a dollar bill amount that you made. Seriously, that tells me that you executed your plan and you got the reward. The reward, if you focus on the reward, that's all you focus on. That's just my opinion anyway. In the psychology of it, that's all you look for is the money. When that trade is executing, you keep looking at that sidebar that's showing you how much money you're making, then your focus is not on your trade, and you're fear trading. You're not executing your plan. If you execute your plan accordingly, then you should be like stress-free. Move to stress-free as soon as you can, and then you go, good, now I can just let the trade run and I can focus on where it's going and what objectives do I want to get out at. And then if it pans out for you and then continues to take off, you say, I'm all right with that. That was a $600 trade this morning. I threw away $400. I saw it at one point. I saw this thing over $1,000. But be happy with that. And then I missed all of this. I don't care. $600. There was the bonus there. Right? Not what I miss. I can't judge this decision down here. You can't judge. If you do, then you're really getting in the wrong mindset as far as I'm concerned. But anyway, we finally traded through the mean threshold of that candle right there. You're above it. You start running back up, taking out the old highs now. I want to see a body get up here and use this candle as a level of support. This one is slightly lower than that one, so I would take this. Some people might just say, I'd rather have that candle there. We trade back inside the main threshold of that candle, which would be the high of this one, or the close of this one. You can get long on that. If you're trading from one array to the next array, here's one array. If you got in on it to go long, to the next array right there. That's the one you got in on to go short, remember? So the one you trade from discount to premium, you're out right there. Because right now, if this turns around and comes ripping all the way back down, you're going to go, crap. Because you didn't trade. You got greedy and kept going higher and higher and higher. Or you're not trailing your stop loss accordingly, or whatever. I don't know, whatever style you're using to manage it. I keep saying greed. That's judgmental. It's not. It's you overshot your PD rates. Let me put it that way. That's a more gentle way to put it, not greed. It's like one bridge too far, one PD array too far you're aiming for. See all those big wicks trying to get up there? Not a good sign. It's just like, hey, trying to get up there, banging off of this guy here, mean threshold. Bang, bang, bang. Can't get above it. So you're either going to just slam it up there and really drive hard on a news release in the next couple of minutes, or we're just going to slam this all the way back down again on this next news release. Do you want to be trading news releases? We have not traded above this. We've only wicked above this. We have closed above the mean threshold, though. Hence the reason we're running these highs out. Let's just wait and see what happens. Julian, I agree. Let price just do some developing here. Let it unfold. And it's really, really a tough environment. I think somebody kind of gave us a question last night in the Telegram channel saying, is it me or is this market really tough? And I think Derek made a really good point when he said, look, even our mentor, Michael, is having difficulty in this. He doesn't even like the way the markets are working right now. He's waiting for a clear sailing, and that's the discipline you can have. We're in here playing around on a 1 minute chart. You can find setups in here, but as you can see, you got to be super, super nimble to be in and out of this market. And if you don't read your PD arrays correctly, you're going to get eaten up. You're going to get in a ring with Mike Tyson, and you're going to get beat up. So if you're not super confident about your entries, then don't take them. Wait for these cleaner days to come. You don't have to keep stressing over March madness here, right? Wait for April. You know, practice your price action here on your demo account. Don't keep going into your prop firm and keep blowing prop firms because you're trying to chase price. Watch your price action. This is a place to study it when it's really choppy like this. Is it still going from array to array? Can you stay on the horse inside this? Imagine what you're going to be like staying on a horse when the market's really smoothing out for you and you really start to catch those glass off days. That's a hang gliding term where it just you get lifted and it just goes and you catch these beautiful runs up. You see those so clear, they're like so obvious. You catch them and you go into this monstrous ride for long rides. And if you can stay on the market in this, imagine what you'll do in those times. Practice. This is the best place to practice. People just get frustrated by this market. If you're frustrated, you're trading. You shouldn't be trading. You should be practicing and just studying it until you see a clean, smooth entry. You take it. But have your setup. All I'm doing, I feel like I'm just saying the same things Michael said many, many times. If this kind of market is way too choppy for you, you shouldn't be in it. Let price develop a little. Morning, folks. Morning, Rev Mera. Richelieu, good morning. Spartanberry, 10 a.m. red folder news coming up. I'm waiting until 10:10, 10:15. They had a boy. That's a good time. That's a good time to wait. A good time to wait. See how you can still see these turns, these swing points. Swing point, come back to it. Swing point. Swing point. They're there. You just got to be able to see them, and you got to be able to say, can I trust where I'm going to get in on it? And in choppy environments, you want to get in on the safest place for your trade. That if it fails, you can get out right away at relatively smaller losses with a fail safe. We haven't taken out we've taken out these highs, so if this becomes a reversal, come back into it. That's where you want to put your trade in, or that's where you could put a trade in. That if it fails, continues going to the upside, you can just go, oh, as soon as I'm on the wrong side of it again. As soon as it trades back, I'll clean that out, and I can either go long or I just wait for another setup. Not that you would trade this. You're 12 minutes away from your news release. So wait and see. Just kind of watch price action. Yeah, that'd be crazy, hey? We have this reversal. Rejection block only. You did not get your highs. If it reverses here and comes back down again, and you were thinking, I'm going for those highs, proof again, you should pay yourself at rejection blocks. Thanks for that, Lambo. I just saw that he posted it on Telegram. Yes. Lobo Dal Cash, good morning. I'll drop it in the Telegram. I had my stop loss taken out in profit. I was looking for a reversal on the news candle. Good morning. Here from Sweden. Mats, welcome from Sweden. Welcome, welcome. So you're still bullish until proven otherwise. Samuel De Hagar just joined us on Telegram. Welcome, Samuel. Telegram's where we usually hang out after hours and chat, talk about the markets, kind of give you ideas. We kind of throw some ideas back and forth there. And we share ideas about, where we think it's going. And pictures, songs. Some guy wrote a song the other day. So you share some of your interests. We've got people that like eagles in there. Love eagles. So it's a place for the community to just hang out, bounce some ideas off of each other, and get your ideas on the market, get to know each other a little bit more. One-hour chart. What are we looking for on a 1 hour chart? Right there. 18,535. If we lose 1835 to the upside on a close on an hour, there's 1835 right there, 1833, whatever the mean threshold of that breaker is right there. See, as we're coming straight up into it, we're eating through 1, 2, 3 arrays. If we close above that, your ass is next. We're looking for the high, as Michael would say. Back to Sunday's candle. Sunday's high again. He's right, man. If you don't get your Tuesday, Wednesday low, look at this. Oh, that was the other one we talked about. I put this on Telegram the other day. This reversal happening. If you miss it here, catch the breaker. If you catch the breaker, you already have one more chance to get in on it, and then off to the moon you go. And that was 70 handles to get out there for the reversal. But you see how this Monday open went straight through Sunday's open. Went all the way down, made the low of the week in Monday. Is that Monday or yesterday? Got too many carrots here. No, that was yesterday. Yeah, it's yesterday's low. So Wednesday was the low of the week. I ripped through that Sunday, came all the way back down, or Sunday's up here. See, it just went right up to the Sunday, tapped it, the Sunday's open, and then just ripped all the way down into Wednesday's low. Then you catch the reversal happening right here. And that was what we were pointing out yesterday. See you later, Levy. Drive carefully. Love you, love you, love you. What's that? Yeah. Sure, no worries. Let me know when you get there. All right. Notice we have not broken these to the downside yet. So you still remain bullish. See that fair value gap there? We're working above that high. You'd expect that to come back down and into it to get short. But as we continue to search higher, run higher, you're getting support off these order blocks. You see this? Your body, you trade above it, probe, you come back down, find some support at it, and finally push through those little probes up into that order block. You run above it, you come back inside it right there. Order block here, run above it, come back inside it here, and you want to see this continuous step up, like climbing a mountain, like Michael talks about mountain climbing. You find these order blocks give you a level of support, and these fair value gaps provide a level of support from an inversion perspective. So look here. If I draw from here to here, oh, it's a weekly. Sorry, I hit the wrong one. So 1 minute fair value gap, we come back into inside it, find some support at these old highs, this old candle here, and we continue to push forward. Look for that order block there. There's another little fair value gap above you, right here. Body breaks above it, you come back to it, find support one more time. Those are good levels to keep pushing higher. You got lots of little liquidity up here, pop through it. Now you're back. You want to see this provide a level of support again. If not, if it runs through it, now you look for this to be your inversion to go shorter. Now that you've run these old highs out and you've run that little high with a spike. And this may be just a simple retracement. So you got to watch your mean threshold, watch your rejection blocks to pay yourself. If you're going to pull your fib tool from there to there, pay yourself a 50%, blah, 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 all the way down, whatever method you use to get out. And then prepare yourself for another run back up. So you should see another little inversion happening. If you take the swing point out, another little inversion to go higher again. And if you don't, then key off the breaker. How's that? There's a bunch of different ideas I want to see happen here in this next little piece. See that fair value gap just kind of holding price right now? That's what you want to see. So if you put your limit order in, it would be right there, Droga. You would put it right in here. Stop loss goes there. You're not putting it there yet, though, until that breaks that low on a close. You got 11 seconds. And it did not. See that? It just bounced off of it. That's acceptable for still going higher. We need a body to get through that. Now CAM Model 1 people are going, ooh, there's a displacement. If I get a CAM Model 1 off of that, I go short. So you see how CAM Model people are looking for an opportunity to go short, and reversal people are looking for an opportunity to go short. And we're just waiting. So here we go. If that continues back down. Now you don't want to see these lows get taken out before you get an opportunity to get in, because that's your objective to take profits at, right? You'd still take it, but you'd be really careful. Put it right up tight here and use your fail safe to get out. And Henry, I know this is your first day here. If you want to understand fail safe, go to Sunday's video. I explain on Sunday how to create a fail safe. There you go. You're below that now, so we've got a reversal situation happening here, and you're not getting an opportunity to get in. Now your objectives are being hit. So you'd be pulling your fib tool from there. If it came back up in here, you'd pull your fib tool from here to here. And if it comes back up in there, look at that 50%, you pop in right there, you pay yourself at 50, and then you pay yourself at 62, 70, so on and so forth on the way down until you get to here. take your money out and move to the sidelines. You may say, look at me, I'll come all the way down here. If you're one of those long haul truckers and you want to catch that on the way back, and then you pull your, if it gets through this one here, I would pull my fib tool to this one and I'd start all over again. It gets to 50, pay yourself. If it beats through that one, then I go down to this one, pay yourself. And if it beats through that one, then I pay myself that way. If you've got anything left over, oh, there you go. That was an opportunity. Short, I didn't take that, but you see what I'm saying here. So now, watch this. If this trades back through this, look at that perfect entry right there. If that trades through that right now, or with a close, you get out. So right now, I'd slam that sucker right up against break even because I wouldn't want to see it. It's already done that. It's already come up into that breaker, hit it nicely, and reacted off it. So right now, I'd be out. That's just me, though. You might still be sitting up here saying, it hasn't broken that rule yet, Darren. If it breaks the rule on a close, got 15 seconds, it'll either rip through you. Right now, you'll lose the full thing. Or it'll close above. It's just coming back into that breaker. Watch the next 4 seconds. See where that ends up. 1. It's above. Now get out. Right there. See how it came back, tap, give you one opportunity to get out? It's going higher. There's your rejection block. If it turns around now and comes back through, reverse your idea. See, it was really, really tight there. That's a fail-safe that saves you at break-even versus getting taken out here. And then you look for your next price leg up. And the next price leg up would bring us in line with... Dun, 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 $590. Where's 590? Above these old highs, back into this order block here. You got to squeeze. Look at that squeeze. If your broker was near you, would have swept you, would have taken you out for sure. Now if that just rolls over and comes back down again, and we get below that low, we did not take out that high with this. I still rely on that one. I don't even like this now. It's all consolidated. Nothing's clean. You want one of these clean ones that snaps up, snaps down, comes into it, and then goes away. So it's that snap up, snap down thing you want. Like these ones here. Snap it down, you come back up, drive through it, come back, give you an opportunity to get long, and away you go. This whole consolidation over this, see how this is a run up with intent? This kind of thing where you've got one sitting here, you've got an inversion going long there, and you've got this potential inversion going short if you take out that high. So you've got overlapping ones here. This one here is supported. The long is supported right there. The short is supported right here. Did you take your low out? And see how we didn't get an opportunity to get back into that inversion? We actually closed right there below it, but didn't get an opportunity to get in on it. Remember, we were saying that our objectives are getting taken out already before we get a chance to get in, so you wait. You get an opportunity to go long. There's a little... We haven't taken out a low here, but we did take out a low here. Inversion, inversion. Body trades above it, comes back inside it. You want to go long. So from here, you're going long off this guy. So when you were short here, you go, ooh, I'm on the wrong side of this because we've traded above this now. Uh-oh, I'm going long. So you quickly get out at break even, and you can, look, if you had a one short there, and you went, I'm going to go too long there, because if I'm wrong and it comes back to me, I'm just going to put one long. It'll close out my other one at break even, and the other one will go long for here, and I'd scale out a portion right there right now. That's how that works. That's how precise you got to be, and you got to be really, literally that candle is where you guys will build your fail-safe. Your decisions will be all based on your own. You decide your thing. You don't have to do my one, or even if you even have to fail safe. But that's how you protect your stop loss from getting hit. Otherwise, right now you're out at a full loss, 1% or whatever percent you risked, because you thought that was going to go short. And we didn't get what we wanted. Our objectives were taken out before we had an opportunity to get in, so second guess them. And the moment that high gets taken out, which is this guy here, you're out at a break even. If you put your entrance in right there and you caught your first one, caught second, caught third, close them all out there. They're all losses without a full stop loss taken here. If you went in with all three. Hopefully that makes sense. I took the short, then the long wick took out my stop loss. Yes, when you get that close, your broker would just go sweep and take you out. If you took the short there and you did not have your fail, so what you need to do, Spartan Bear, is decide what's a better decision for you right here. Are you going to be happy with that little pop above? If it's a little confirmation and it's a close just above that low, then you go. You have to either refine your fail-safe or say that's okay. Well, that was my objective, and if it took it, it took it. I don't care. Now you've taken that high. See that? This guy here. Watch. If we had a body trade below it, come back up inside it. You want to start aiming for these guys. Pull your fib tool for the next low, 50, 62 if you're going to do fib, or if you're going to trade arrays. That's a good place to practice your arrays. The fib tool is kind of like for somebody who doesn't know how to read their arrays very well and wants to really protect their money real fast. Or maybe you do read arrays really well and you just really enjoy that fib tool method. And as my buddy Thomas says, you can fib to me right here. As soon as I get an opportunity to get in, you can start fibbing to me. Fib to me, baby. So pull from here, run up to there. If we trade below this close here now, there's your first opportunity to get out. Second, repeating the same thing over again. You see, I just want to kind of show you where we're down to rejection block. You don't get the lows taken yet. We got some liquidity down here. So if you get close in the next 23 seconds and you come back up and decide this candle here, oops. Then you start scaling out at 50, 62, so on and so forth. And unfortunately, you're not getting an opportunity here. Now, there you go. Now you've closed below it. So just watch it. You don't have to trade any of this stuff. I don't recommend you trade any of this stuff. That's just a consolidated mess of garbage, but I want you to kind of keep your eye on it. So see how we've taken out our objective like we did here. We didn't get an opportunity to get back on that candle. So it took our objective and then it can turn on us again. So now this one here, we want to try and get in here and we don't get an opportunity and it's already taken our objective. One, there you go. It's taken all those ones. So we see the reversal happened here. We close below it. I tell you, these reversal patterns happen all the time and they're very accurate. Well, they can be very accurate if you play them well. So as soon as we've traded below here, that's a breaker now. Mitigation more than anything else. It did not take out that old high. It was super close though. Now you could mitigate off of this if it comes back in here to go short. Pull your fib tool on the larger range now. This mean threshold of this candle is important. If you lose that, don't forget you got this here. So you're trading from premium array to discount array right here. See this one here? I guess, and again, this might be a more refined thing that I'll have to focus on later, but I'm looking at this now and I'm going, okay, we've chewed those ones up. This one here, next one down below you, you've just traded below it, popped into it. Now we're looking for continuation on the downside to mean threshold here. If we lose the mean threshold on that, look over here. Look for the mean threshold here. If we lose that, look for further downside into this inversion down here. It's a discount array. So is this one, but where does that put us for? Here's your silver bullet setup time. So if we do come back into this mitigation block for a silver bullet short, again, you don't have to trade this, you guys. It's a really crappy environment. That was advanced theory on the ICT breaker model. So we're going attacking that mean threshold now. You want to see it come back, get you an opportunity to get in off that mitigation block there. I guess you have this breaker here now. You've traded below it. Last down close candle inside this little swing here before running and taking these highs out. So you trade body below it, you come back up inside it right here and short. You want, but you're really between this candle and this candle, so you want to see this one really give up the ghost and start digging down into here now. That's not a silver bullet setup, by the way. It's just off of a breaker. Now, if you're one of those breaker to breaker traders, you see this stuff, that's your setup, and you're all over it. Same with cam model people. If you're a cam model trader and you get an opportunity to get them, consolidation, body breaks above, you come back into your consolidation, cam model 1, aiming for highs, you get them all, and you move to the sidelines. It's deliciousness. There's so many different models you can use. So many different models. Cam 3, I like that one. So you see off that breaker, now we've eaten through the mean threshold on this close. See that? Come back up to your breaker one more time, give you an opportunity to get short one more time, and then you're digging down. Look in here. Ooh. Boom, there you go. You're in that now. Your stop loss would be right into profit right now. I'll be moving into the profit here. If you're off the breaker, moving into profit here, and start asking yourself, now that I've hit this objective, if I was trading from this short, if we managed to get in on an opportunity, let's say this would have come back here, gave us an idea to get in, so we would have got short there, premium to a discount right there, you would have got a perfect entry there, all the way down to a perfect exit right there, with a little touch to spare. Breaker, or sorry, premium to discount inside the range. They'll become more and more obvious to you in time if they're not already obvious. So the question you have to ask yourself now is, where's the inversion for a reversal? Where do we validate that? Where do you guys see it? Where's your trailing stop loss, which is your failsafe, not just a regular old trailing stop loss. You have a specific trailing stop loss that you're looking for. Which is the failsafe. Where is your failsafe sitting right now? Give me if you guys have one, where would you put it? Just make a comment in the comment section there, just so I can see where you guys would put your, just give me a number or a level that you would have your stop loss sitting on, and your failsafe, at what point your failsafe. Just give me a number, put FS, failsafe number, and stop loss at a certain number. Where would you have that sitting right now if you were trailing this down right now? $10.12 high. 10.12 high. Yes. I like it. And where would you put your fail safe close above CE of upper wick of the 10.12? Nice. See that right there? So if that's your CE and you go, I'm out right there, that's my rule. It popped up above me, I'm out. My stop loss is sitting there above the 10-12 candle. And I go, as soon as that breaks above that on the upside, I'm out. Here's where you realize, oops, I need to refine my stuff, or I need to go, okay, I'm good with that. I take all that in profit and be happy. If it continues down and leaves from here, I'm okay with that. But if it doesn't, it suddenly turns around now and starts ripping back up. You'll go, ooh, I'm kind of, yeah, I didn't get all the juice out of the lemon. I don't care. I did realize that it broke my rule right there. So if this starts to go back up again now, you'll start to go, ah, there's the inversion. And it's off of an old inversion as well. So just watch price action now. Because if it rolls over and keeps coming down, you either need to say, all right, I need to look back over here and say, what order block am I, oh yeah, okay, I'm keying off this one. Maybe I could give myself the mean threshold of this candle as the support level to continue going down. I give it a little bit of wiggle room, and that's all your decision based on that little piece right there. That candle's open. That wiggle room will be your deciding factor. And if you are going to go down, where is the next objective you're aiming for? So now you're starting to see the inversion kicking in. See how you're starting to run back up? We ran all the way down. You would have nibbled the last bit of profit out of that. But if that was your fail safe, if it comes back there, you'll go, ooh, I'm glad it worked. So am I upset that I didn't get that bit, or am I happy that I didn't get my more profits taken out? I took my profits right there. Hopefully you get to see that. So well done, you guys. Julian and Sparkberry, excellent, excellent. The one fail safe was at 11, 10, 11 low. 10, 11 low. Yeah, yes. Attaboy. Yes, you got it. Dewan, excellent, excellent. Now, would you have followed that rule right there? And I love these ones because these ones will really make you think. Oh, you instantly start getting that little voice on your shoulder saying, "Don't do it. It's not high enough," and you get out or you stay in, and you go, "Ha, I was right," and then all of a sudden it goes, "Oh no, maybe I was wrong," and you didn't take anything below that low. If you did, you said, "Yeah, I'm going to stay in that. If it runs down here one more time, I'll take that low out and I'll move right into break even here in case it screws me over." So now it's run above. We've closed above it big time now. Now we're coming back into it. So now if we close below it, we're short. Because this is just another price leg down. And that did not run for your high. See how our body's closing right on it? Here's your opportunity to go long right there. And if it fails and drops below you, comes back to you, you use the same rule you used to get out right there. To get out right there if you're wrong on your long and it goes short on you again. You get to get out here. So you'd watch this now. Your stop loss would be down here. So if this runs your whole stop loss, it happens sometimes. This is when you say, "Oh, I hope the rejection block actually holds me now before it takes my stop." Now, as soon as it came back up there like that and came down and tapped that, you'd be out. You save yourself a little bit of extra there, but we're definitely bearish again now. All because we closed below that. You didn't get an opportunity to get back off, and it just came back and took you out. So there's a situation where your fail safe right there only saved you that little piece. Otherwise, you took a full loss there. If you were going long, that is. Now, that might sound complicated to people who are just coming in, but once you get used to it, and you're on the right side or the wrong side of the market, believe me, it'll save you more often than you'll lose. And we still have yet to fill this downside from one to the other. Great place to be out, collect your profits, and be out there and sit on the sidelines and wait for a better setup. Because these swing points tend to work best when they're past a significant low, not just these little wicky pieces above them, but significant lows. So if we swing through here, then you start looking for one of these big ones. You swing through that one there, you don't get anything there. You get through 50% of that range, maybe we have to start looking for something further down. You say, if I've gone more than 50% of that big range I'm sitting in here and I can't get back to get this to go long, then I'm going to wait for this one to get taken out on the downside before I look for a swing point. Maybe that's a rule you have to start establishing. It's a continuous and evolving process. See this one here? Just watch price. Don't trade anything. Just watch. $1,200 plus 994. Is that all dollars you're talking about there, Chris? Are those all wins you've had so far this morning? Didn't you nail like $3,000 yesterday too? You got $3,400 already this morning. Good for you. And that's in all this choppy crap. You want to see a body get above this now? And then you start trading from one to the other, wherever that reversal one was there. Order block, you're right up inside that. So the breaker, you just bounced off the breaker's mean threshold here. So really you're between here and here. I'm just treating this like it's an inversion, so I'm going to try and grab something off this inversion here. This is all demo dollars, so now if it trades below here on a close, we do have this fair value gap here. So what's your wiggle room? We have an order block down here. Is it acceptable? And let it rip down there, grab that, and then snap out of it. You want to see that close above? Give myself some profit right off the bat. Pay myself there. Move myself to here. It's $300. Quick little snatch it out of there. Rejection block. Pay yourself at rejection block. And if it comes back in here again, we will rinse and repeat and get to do the same thing over again. It's like starting our trade all over again. That's called buffering. So you build a buffer on your trade. And so now these are far less of a hit. If it, well, ideally I wouldn't want them to come down past this point right here. So I'm going to put all mine right here. So see that little, let me just put this right in here. There's a little tiny piece there left still. I'm going to move that right up into profit again. Move that right up into here. That should have been right here. Should have paid myself right there. That's okay. We'll do one more time, rinse and repeat. Let's do one on this time. That's building the buffer. See how you just make some money, take it off. Make some money, take it off. And if it finally blows through you, the money you've made to buffer any losses that you would take here. And look at that, it's just tapping on me but not getting me in. There, it's in now. And then pay yourself with that guy right there. Sell there. I'm really tight to that little spot right there. It could quite easily run down to the rejection or into the mean threshold of this candle. Watch right there. We're still closing above it. We're back into that little fair value gap down here. I want to see that come back up, give me some more profit now. I don't want to see that get any lower than that. Now I'll move myself into break even. As soon as it starts getting up there, if it's not paying me there, because that's a rejection block there from that little swing point. So you could take that, then the next one. So I'm pulling myself up to a break even at 20 bucks, whatever. You guys get the idea. And we did it all inside that consolidation. And that was like 500 bucks or something. Oh, I'm not supposed to be in that. I left that, I forgot to take that sell off. The sell is used to get yourself out of the trade, right? But I closed it out. It came back, took me out. So you got to remember to close out your sell side. Luckily, I made 30 bucks on that because it hit it, came back off of it. And then now it's driving. I'd be underwater. So lesson learned. You got to take it off quick if you're using those opposite sides. So that's the problem with that. If you set your buys as a way to sell yourself out. You if you take it out early and it rips up through you, then all of a sudden you're in the wrong side of a trade that you don't want to be in on. Instead of it using it to sell you out, you ended up closing out, and then all of a sudden put you in on the wrong side that you didn't want to really be in. In cash accounts, do something nice with it. Do something nice with it, Chris. I tell you, more will flow to you. Do something nice. That's like a $6,000 2 days for you. I'm telling you, you've made this so much easier to read. Yeah, it can be, once you see it, it seems so much more clear. It's like lifting the veil, isn't it? But again, you still got to be pretty swift to nibble your profits out of there. Now, if this was just clean, a clean day, you didn't have all this chop in here, you had a nice clean run up there, you would have been in that, and you could have just seen a nice clean lift. But those salad days are coming. So this reversal pattern we saw here, you have 1, take out some money, 2, take out some money, 3, take out some money, and if you had some left on there, you'd still be heading up for the premium array up here. So you have 3 opportunities to keep taking money out of that thing inside a consolidation. That's how you trade from PD array to PD array, and you just keep paying yourself at rejection blocks. You were denied every time you were trying to reach one PD array too far, one bridge too far. Just take your rejection block. Take the rejection block. Take the rejection block one more time. Or just enjoy it. I leave a little piece on there for a run all the way up. I still have problems with that, especially in these kind of choppy environments. I can understand the psychology I'm almost building for myself long term. If I get into that skittish kind of, I just want to take whatever little quick profits I can, it's fine, because you can nibble your way to success that way. You can get fat on a lot of nibbles and cheese here. But I've got to try and leave a piece on to let it run up and let my stop loss sit at break even. Take some out, let it sit at break even, and see what happens. Trust that it's going to go higher. We were calling this array when this run was down here. We called the run down to that. We didn't get an opportunity to get in on it to run here. We got it here. Then you look for your reversal setup. We tried to get in on it there. Or got out right there for a short, or for closing out your shorts. You guys picked an awesome failsafe. I bet you're happy you picked it out now, right? All you lost was that piece right there, in terms of profit, in terms of perfection. So you saw that, you went, I'm out. Came back. Oh no, yeah, I'm definitely out now. I want to get back. I want to go long on that. So you got out there, but you got long right here. So you're still back. You've nibbled more profits. So what you would have lost in profits here, you gained in multiple profits inside here. And obviously the reversal back into that one. Premium, discount, discount, premium. Back into, oh, that's a breaker, my bad. The breaker right there is what we just traded back into for a short, back into CAM Model 1. need to stand up a little bit. My back's really sore. What's that? SB? SB. What do you mean by SB? Was that SB? Oh, was that SB? Sorry, I don't know what SB stands for. Or was that BS? Oh, a silver bullet. Silver bullet. Let me have a look here. The one that I was in, was that silver bullet? No. Your 10 o'clock. Here's your 10 o'clock right here. This is why to me you never take the first one. If that was if you were coming here back into a silver bullet, you're taking that for a silver bullet. You just got your butt handed right here. That's why you wait for the 10, 15 one. So you wouldn't get one here. You don't have one there. You don't get that one there at 9:10. And this one here at 9:12. That's the reversal. And you're looking for this silver bullet. You would have been taken out here too. If you, oh no, here you would have been short. Stop loss would have been up here, so you would have made money at that one if you're looking for a quick 10 handles. If you traded back in here, that's 92, 492 down to 48. So you would have had 12 handles. Like Michael says, if you want 10 handles out of it, you take 10 handles, move to break even. That would save you here if you would have paid yourself at that point. But most people get into silver bullets, they overshoot. I'll guarantee you 90% of people who lose their trades lose it because they overshot their PD arrays, or they didn't even have a PD array. They just had a fixed R ratio, and the R ratio never pans out. It's a fixed. This is a dynamic environment. These things, your SIBIs, everything are all varying in size. There is nothing that is rigid in this algorithm. It is all constantly fluid, like water. Why you want to put an R1, R2, R3 ratio on there? That follows no mathematical rule for algorithm, because everything's just constantly expanding and contracting, smaller, bigger, smaller, bigger. So having a rigid R ratio, it's a great way for you to validate in your mind that I have a R3, R1, which is fine if you're saying, if I have a minimum of a 3R ratio and I can fail 70% of the time, I can still be successful. I love that idea. I love that idea. But I just can't see myself going, well, I want to constantly check my stop loss and I want to go R3 above that, and then I'm happy with my trade. I'm looking for PD arrays, man. That's much more specific for me than a set line that has nothing to do with a, like if my R3 was sitting right here, let's say, I go, okay, well, what is that really lining up with? Somewhere in the bottom of that, not the midpoint. That's not my R3. It's not definitely not the midpoint of this. I'll say, okay, well, if that works for you, again, I got no problem with it. You do whatever you want to do. It just, to me, it just seems much more rigid than having a specific thing. Like that's why trailing stop losses bother me, because they're fixed, and you get these candles that whip back against you, and you go, ugh, I just got my stop loss, my trailing stop loss taken because it was too small. And then you're constantly trying to find ways to find the optimum distance to be behind something, instead of going, if you have a dynamic trailing stop loss, like a fail-safe, it responds to the size of these things. It is dynamic. It will be bigger or smaller depending on whatever block you're in, right? Depending on whatever specific array you're in, it will tell you, say, hey, look, man, this one's a really small one, so my stop loss is sitting below this level. I'd be sitting here, so if it trades below, it comes back into it, I'm out because I want to go short, provided I take that high out, of course. So if I was bullish here and it came back to here and went through that, came in, I'd be like, okay, I'm out. Just because it's telling me it's coming back into this part of the range, which is down into a discount. So it should start digging down into here. Because if I'm in that range, that's a premium array and this is a discount array. And if it's going to come through that, chances are it's going to come back, tap it, come down into a discount array, and then start compressing, getting smaller. See? And in this case, it didn't close below it. It just went straight through it, right down into discount array, inside this range, there to there. Saint J33, is it coming down to a cam model? It did. And if you didn't catch your cam model entry right there, and then take yourself out of the rejection block right there, and you were hoping for the high, one PD array too far. And like I've been telling you a million times, and if you're new, you'll hear this many, many times, pay yourself at rejection blocks, not the high. You will be denied so many times your high and wish you would have taken your rejection block. That right there is precision. This paid me twice in here off of rejection blocks before it even broke out of there. So discount array, look at that, right to it perfectly, back up into premium array again, came right off the carrot. So now you want to see this go higher, break through the mean threshold of this candle, take out the rejection block, then that's engineered liquidity above you, and then continue pushing higher. And if you look, there's a swing point, not that you really like wiki swing points, but there's the inversion, body gets above it, come back, fill it perfectly. Now we're getting back above it. Now you want to go through this one and keep pushing higher. If you just come back into this range again, you're banging around. So right now I'm bullish off this here. Just because of this right here, I'm bullish. And if you bought in right there, if it fails below you, comes back to you, you break even. That's why when you're bullish, you'd be on this side of the inversion to go long. Pay yourself at the rejection block, then pay yourself at the high. Move your stop loss to break even right away. Like right now, I would be like, blink, I'd be slammed that right up against there. So I guarantee myself some money because I'm in a range that may be compressing. So, and we've got such chop and crap going on in the markets right now. You pay yourself, give yourself some money, and if you get a bonus out of it, sweet. As soon as it clears that candle, I'm like, Ramo, right up to that candle's low. You want to be right on top of this inversion again now. And if you can get through this order block, if you can pay yourself a piece there, take a piece there, take a piece there, take a piece there. And you're still aiming for that piece up top. Pay yourself a piece there. Slam that sucker right up against there. Oh, I'd slam myself right up against here now. You've just taken on another piece there. See that? That's precision entry there, man. I'll tell you. And you just paid yourself at rejection and those old highs. And now if it snaps back in here, you'll be like, dang, I was aiming for that thing up there. No, you pay yourself. Because if it comes back here, you'll kick yourself in the ass because you just threw away hundreds of dollars. Good for you, Russell. If you caught the Cam 2 model and it paid off for you and you paid yourself at the appropriate levels, then your Cam model worked. Focus on the model working and the exits. You know, can you refine that? Could have made that a little better. Go back and just tweak it. And those handles and those dollar bills will all take care of themselves later. They seriously will. It was also a fair value gap after candle closed at 1042. Yes, right here. Lovely. Like that's a perfect little entry right there to go long. And it's the one of those where your fail safe's going to be right there. You enter in there, stop loss is here, fail safe's right there. If it fails below that, you get out. And the moment it starts to run back up into profitable range inside here, above that 50%, even if you did this, if you went instantly, if I'm in at that point, and there's the high right there, I'm in at that point, as soon as it gets to, oh, you got to reverse this now. Let me just spin this around. You see my point? So you get right in here. As soon as it gets to 50%, move yourself to break even. And then as soon as it gets to 62, move to 50. It goes up to 70, move to 62. And if it comes back to you and it doesn't, then if it moves up to 70, you just keep and you keep trailing your stop loss over super quick. And if it runs that old high out, you should be getting out right there at that rejection block. 100% of your, or 90% of your trade should be out right there, and 10% was out up there, or 100% of it is out up there. Whatever. That's why the fib tool one, I like using the fib tool in tight consolidations like that. So you just go use your fib tool and drag your 100%, your 4 handles, instead of trying to unload them at that position, just drag your fib tool up behind it, and when it comes back and tags you out, you're in profit automatically. As soon as it breaks 50%, you're in profit, or break even at least, because you know it's going to come back and tap you out eventually. And right there, it just ran the highs, and now we're back into that range again. And if you're aiming for that, you're pissed because you blew away another opportunity to collect your highs. And you're back into this consolidation again. Back to here, order block, mean threshold, discount array. Do you look at other charts for reference? No, I haven't really looked at those other charts for reference because they're all sideways and crappy right now too, right? We're just trying to snatch as much money as we can out of these. I just see these kind of internal arrays or internal ranges that we're in. And this is trading consolidations, right? When you're in a consolidation, you trade premium to discount arrays and you snatch out real quick, take your money and move to the sidelines. And you're in and out real fast. That's if you like trading consolidation. Some people are like, look, I'm out golfing right now. I'm enjoying myself because the whole market's crap right now. It's March madness. So I'm going to wait. And that's fine. It's perfectly fine. I just want to show you that there are still setups available to you for quick. And you got to be super nimble like you're doing, Chris. You're obviously doing a great job of finding the nimbleness of it. There's your mean threshold right there. Rejection block. Didn't quite hit it. Mean threshold at least, so should take out the lows, or at least the rejection block. Like array to like array. If you're inside that consolidated range, you tend to go from like array to like array. So yeah, when you're inside consolidations, don't settle for anything in the this level here unless you're looking to just quickly run up and grab a hold of some profit. If you think you're going to be in the premium portion of that, that's this whole consolidation. If you're going to stay in premium and you want to go premium to premium, premium of premium to discount premium, premium to premium, discount premium, before you finally come back down into the discount range inside the larger consolidation. Study his PDRA matrix, man. Study it, because this is how you use it on a 1 minute chart. In a tight consolidation, it still works. Everything Michael taught you about PDRA matrix, you see it here, put to work on a consolidation. To me, this is the ultimate test. This is the ultimate test of his strategies, his PDRAs. If they were wrong, they would fail. In consolidations, they would fail, but you're still seeing premium and discount arrays reached for, order blocks reached for, imbalances, all of it. All of it is being reached for. So to me, this is like gold. People look at this and go, ugh, it's too messy, and they ignore it. I think, no, you're missing an opportunity to study price action like nobody's business. If you miss the opportunity to see this, that's fine. It's not your market, not your level you want to play on. Now, nobody should have to play on this level, obviously, but if you see it, discount, premium, discount, all the way down to it, all the way back up to it, inside the wick. Now you're looking at this candle here. So you're stuck between here and here. It's getting smaller, compressing now. You're between here and here. Now you've got to bust out of here. You got to get to this. You'll probably get to the mean threshold of this, or again back to the rejection block. Or that little guy there is all you need to just start slamming through here. So there's so many options that you can explain, but right now I'm here and here, so I'm stuck. I want to see the mean threshold give way on the downside, or I want to see the mean threshold of this one give way on the upside and start pushing through higher prices. Looking up here, because when you're looking at the larger range that you're in, you're sitting around equilibrium, right? Maybe it was just waiting to come and nibble on the carrot. See that? It's just sitting there. It can't make up its mind what it wants to do, but it put the carrot somewhere. Let's put the carrot up here. And we're coming up for 9 o'clock now, so that's 11 o'clock. Usually you start getting a retracement back from 9:30 till the high at the range, and it usually retraces back into 50 to 65% of that. And look, we're already in equilibrium of that range that was created between 9:30 and 10 o'clock. Or 9:30 and 11 o'clock. You usually get the retracement now while you're compressing, getting smaller inside this range. Then you're getting smaller inside this range. And now you're looking to either get smaller inside that little range right there, inside this range, compress. Cam model people are just saying, I don't care, just waiting for it to make its mind up. I want to see an impulse like out of here. I'll catch that for a run back up into a higher array or a lower array. I don't care. I'm right in the middle of all this right now, so I'm happy to take either direction. You bounce between the 3, the 5, the 50 minutes to get an idea of what I'm doing in the short-term period. Chris, that's perfect, man. If you're bouncing around inside here and if you get a break out of here, for example, if you saw this and you got this run up and you go, all right, right here on a 5-minute chart, where am I on a 5-minute chart? So I want to go over here and I'm going to put this at a 15. I'm going to put this at a 5. And if I got in right here off of this and I go, where's my 5-minute objective? Ooh, 5-minute objective is right up here, that breaker. Yeah, it would be a breaker. So that little guy right there, that candle, there's a fair value gap above me. If I get in down here, you won't see anything on a 5-minute chart there, but dang, on a 1-minute chart, you got the reversal and you go, sweet, now I'm going to look at my 5-minute chart and look for an objective to reach for on the higher time frame. That's right here, right on that candle's body. Look where it hit, right there. Your objective is done on your 5-minute, you're out. You move to the sidelines. On a 15-minute chart, maybe you want a 15-minute chart. You say, well, you know what, as soon as, where did I enter down here? You entered right here. So you're in this wick and you go, what's my objective I'm aiming for? That order block. You would have been out sooner, or you would have been out later, or you would have been out here, or you say, I'm just going for my rejection block, and you'd still be getting out at the same level. But you have 3 different arrays that you had, 4 arrays you'd have to go through in order to get from there up to there. But your 5-minute just got you in a nice little doozy of a run. You caught this one on a 1-minute, and that was your objective on a 5-minute, and you hit it. So yeah, I totally agree with you, Chris. That's a great way to do it. Exited too soon and could have gotten another 5 points before exiting, but overall choppiness created. So Russell, you say you could have got an extra 5. How are you judging that? Are you judging it based on new information, or are you judging it based on a decision that you made back then? You could have made a better decision, not on the information that you have now, but on the information you had then. Could I have picked a better choice? That's the one you judge yesterday's choice on yesterday's information. Don't judge yesterday's choices on today's information. Otherwise, you're just going to constantly beat yourself up for every decision you make in the past. You'll beat yourself up in the future, and that's not a good place for your mind to be. Just my personal opinion. I see people doing that all the time. In life, they beat themselves up. You beat yourself up on a decision you made yesterday with the information you had. You did the best you could with the information you had and the resources you had available to you there. And if it doesn't turn out, judging yourself on that decision based on the outcome today is ludicrous. It's insanity. Absolute insanity. It's going to do nothing but drive wrong neural pathways in your brain. And you'll just create more shit inside your head that's you don't need. And you wonder why people get marred down in a lot of negative self-beliefs. It's just those little tiny comments you make to yourself over time. It's like that Chinese water torture with that little drip on your head. Boop. It doesn't bother you for the first little while, but then it feels like someone's dropping a hammer on your head. When it's repeated over and over and over again, you start to believe that every drop is like a giant brick landing on your head. That's what you do. It's a slow, insidious way to eat away at your positivity, to destroy any new neural pathways that are looking to find success for you. Now, this is a high resistance environment. See how it's compressing? It just keeps compressing and compressing. See, Simo, you're basing it on what I'm saying. Don't do that, man. If I go, I'm bearish now, and you're bullish, and you close out, you're basing it on my decision, not your decision. And then I'm trading for you, and then you blame me if it doesn't work out. That's why you have to have your own setup, your own model. This is not about Darren's way of trading. I'm just trying to show you price action, make you aware of it, so that it hones your skills in whatever setup you choose. Do not go in and out just because I said so. Because then you're just looking for me to feed you, and you're just going to become dependent on me. Like Michael says, it's just not the way to be, man. Take the time to study this, get your own confidence, see it work. And when I say I'm bearish, you go, yeah, I'm bearish too, because I see it. Not because I got to get out. If Darren thinks it's going down, then it's going down. You have to see what I see. If you don't see what I see, you should not be in a trade. because then you're just expecting me to fish for you, or you become dependent. Not a case of you expecting it, but you start second guessing yourself because I'm telling you something different. I could be completely wrong and you'll end up being right. Then what do you say to yourself? You start going, oh, he's wrong, I was right. Then you're trying to find a way to encourage. Then you got so much conflict going on. Ugh, I've done this. I just feel it so many times, what's going on in people's heads. You make enough mistakes, you go, oh, I gotta know what you're doing. Don't do it. It's taken me years to try and battle this psychology of negative self-talk and all those narrow pathways I created of self-doubt. And it's taken so long. I just don't want you guys to go through the same thing. Do you assign any weight to any particular PDA, whether it be fair value gap, breakers, order blocks, rejection blocks, etc.? Yeah, I do. Kenneth, you'll hear me say this is a senior array, this is a discount array. Or sorry, this is a senior array, this is a minor order, low order block. I'll assign it a certain level. Like right now, that basic order block that we're sitting in there now is a breaker. It's validated as a senior level candle. We've taken out a low, we've taken out highs here, and we're about to take out this high here. That makes this a breaker. So now it's like cam people are looking at this going, oh, come on up. Give me a body above here. Come back. I'll take that as a cam 1 for a breaker way up high. So breaker to breaker trading. That's a senior array. If that did not break these highs, it becomes a mitigation block. It's a middle level array. So it comes back now expecting that to be a level of support in here. We've run that high out. If we eat through this thing, which is because it's a senior array, I'm expecting there to be a lot of strength in that. This is a reprice rebalance, so I'm expecting this to hold price and then snap off of here and come back up. This would be like a reprice rebalance right here. And if we lose the mean threshold of that candle on a close, then I start getting I start thinking that was just a stop run and we're looking for further downside prices. So yeah, that's not looking good now. Yeah, it's already ran that hole out. So that's just a stop run. Gives you some information. We've lost a breaker, so now you're definitely going down. We have no swing point, so there's nothing to really key off of. Now is this a stop run here and a stop run here? Cam model people are like, no, I wanted a body above that, so I'm not taking this as a cam model entry. And if you did, and that was your consolidation, then you go, as soon as it closed below your mean threshold right there, you're out. That should be your 50%. You go, ooh, I closed below that, I'm out. If not, it just took your stop right there. You got to be disciplined to follow your rules. Sometimes they're like little tiny decisions to make right there, and they're like really fast decisions for a fail-safe. Because literally 1 minute later, you're gone. Your stop loss is taken. So now that becomes important, right? Because now we look at this breaker. We just traded right through that breaker all in one candle. It was just like, boom, right through the whole thing. That breaker loses strength. So now you get, does it provide strength on the downside? So now that we've run out the highs, you run below it, come back into it. There's a cam model 1 right there. Or this breaker here provides support on the downside now. So you can trade it from both directions. This direction here is the downside approach. So if we can come back inside it, so wick, body, mean threshold, high. Those are the 3 or 4 levels that you want to be looking for to get short off of this. Ideally, you don't see that stay open. Now you've got a body below that. That's a good thing. You come back up inside here, 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 inside that breaker, you want to go short. If you break above it, then you've got a swing point, see? And now we start to go long. So you've got 2 choices, one to go long, one to go short. So you say to yourself, which one do I take? Neither one. You don't take either one. Unless you're rolling the craps, take a pair of dice, roll them, and if it comes up 7 on the direction you want to go for it. Because that's what you're doing right now. If you can argue both directions, don't take it. Chris, hit the like. I find it funny. Some people just refuse to hit that like button because it's like, no, I want love before I hit like. I'm all right with it. I was surprised there was 100 people in here yesterday. We had like 40 some odd likes. I thought, wow, there's like 60% of the people don't even want this. I'm obviously not doing something they like. But that's okay. I'm all right with that. That, right, don't judge. That's right, don't judge it. It costs nothing to paper trade on TradingView. Best thing I've ever done was spend my weekends going through the previous week's trading, the prime trading times. Invest says, big sell's coming. How do you know big sell's coming? Invest. Give me a reason. Don't give me a broad sweeping statement, because if it hits, then you sound like a genius, but you don't give me a reason why you got there. Why is there a big sell coming? Because some analyst said so? A fundamental thing that you think is going to... Look, I want to hear. I want to know why. Just saying, the sky is falling. Okay. When? Where? How? Give me a reason. If you say, look, Darren, on that daily candle, if you see it hit that thing, I'm expecting it to fall right there. I go, okay, yeah, that looks logical. Yeah, I would expect to fall there too. And then I would go down to a 4-hour chart and I would look for a setup, or a 1-hour chart, and I'd look for a setup for a crash that day, and I'd be like, sweet, yeah. And then I'd go to that day and I'd wait for that. And if it manifested, I'd be piled in on that investment with you. Invest. Because you had a logical statement that was backed by a logical entrance. But if you just go, it's gonna crash, it's gonna be a big sale. People have been calling for a crash in the market for years now. No one's gonna call it perfect. But we might see it on a weekly. You might see it on a daily. You might see it on a 1-month candle coming up and just nailing a perfect entry, like something like, there's that, let's say it was this guy here, and this was the 1-month candle, and you finally popped up above it like that, and you came into this, and somebody said, I think the market's going to explode, and you go, damn right. So you're on a 1-month candle and you're inside that inversion that happened on the 1 month, and it just starts rocketing up for the next 2 years. It starts rocketing up, and somebody says, I knew it was going to happen. Well, yeah. You gave me a nice logical place that it would happen. You waited for an ideal entry on the weekly or the daily to get me in for a long right there. I find it, and I'm looking for any opportunity. The moment it hits that candle, I'm looking for any opportunity to go long. And if it came back right there and it came all the way back down on that candle, and I found down on the 1-hour chart in the 1-month candle that I was going to go long, because I'm trading mega trades off the long 1-month candle. You've been in this for years, and you've been scaling out, and you've been moving your stop loss up. You're doing the Michael 21-41 rule for, or I think it's 40-21 rule for trailing your stop loss up in terms of number of days behind it for mega trades. Companies have to rebalance because the first quarter is about to be over. That's all fundamental stuff. Doesn't mean squat. Doesn't mean squat. Until I see it on the charts, fundamentals does not alter how I trade the charts, should not alter how you trade the charts. If you think the markets are going to sell out, look for the day that proves that point. Otherwise, you trade what you see. All that stuff is hearsay. And yeah, you could say fundamentally on charts, you could prove it, blah, blah, blah. But give me an entrance then. Give me a perfect entrance that supports companies have to rebalance because of the first quarter. Where? Where are they going to rebalance? When are you going to see that? Is there a day where, like when somebody, here's an example, like somebody would say, and I'm not trying to shoot you down, I just want something solid. I want you to believe in something solid and not some vague idea that companies are supposed to do something on this quarter. So they do it, and all of a sudden the market rips away and you go, I was right. Well, yeah, where did you get in though? Where was your entrance? Somebody said it was going to happen, great. But where did you see it? I'll tell you where it is on the 1 minute chart where it started. Whatever it does, I'll tell you on a 1 minute chart where it started. That's a perfect thing. I'm not saying today. What day are you saying? What day is it then? Or do we just wait for it to happen and then miss it? Screw that noise. I'm with you, man. Let's get it. Let's catch that sell. So we're anticipating sell. So go over here to the daily chart and start looking. We've got a silver bullet set up here now. Coming. Go into the daily chart and look for that one thing that you're looking for. Invest. You say to yourself, if we have a crash, I'm going to go with your idea. Let's say we're going to go with the idea that companies in the fourth quarter or the first quarter have to post, how is it you said it? Have to rebalance because the first quarter is about to be over. They have to rebalance. Okay, so if we're expecting a sell and we're looking at this daily chart, we're looking for an inversion or a swing pattern to happen. We've taken the highs, so I'm with you. Now let's build a technical analysis around your idea, invest. Okay, so you say, this is what I'm expecting then. This fair value gap right here, it's an inversion, right? It's this inversion thing where you come back into it and start running lower. This is what I'm expecting. If we break this over the next few days or weeks to come, when the quarter is finally over, and we get a run back up inside this, anywhere inside here, stop loss will go up there because we're mega trading now. I'm expecting a run below these lows. I'm expecting a run into the mean threshold of this candle. Rejection blocks, old lows, this fair value gap. When this is broken, so invest for that idea to pan out for me, I'd have to see that low get broken right there with a body come back inside it and start trading it short. And you can layer in your buys to go short or your sells to go short, aiming for here and here and here and here and here and there. And then eventually aim for down here. And I'll stay in that all the time. I've got proof that says I'm still bearish all the way into that point. But if you're trading on the daily, stay on the daily. Because if you go bearish all the way down to there, and then all of a sudden you get this reversal happening like this, and you go, oh, I'm on the wrong side. You're trading a 1 minute chart. You're not trading a daily anymore. These are just retracements that happen all the time. So here's a small, tight little range. See where you are? You're right in the middle of it. So you're catching a equilibrium array. You've popped above it. So look, watch when I pull the fib tool. This is why you've got to be super smart with your exits. There's 50% right there, right on top of our, so we get into a little discount. So our body trades above it right there. You come back right to it here, and now you want to go long. So it can come all the way down into here. If this is where you want to put your stop, your fail-safe will go here. So your entry's there, fail-safe's there. If it closes below, comes back up, you can get out at break even. If you decide to take that one there and you go long, First one, right there. Pay yourself. Move yourself to break even right now. You've made yourself some money, and you're in a tight little range, and you're right in an array, which is a breaker, mean threshold of a breaker. Pay yourself at the mean threshold. Slam that sucker right up against break even. If it runs for the rejection block, pay yourself again, and pay yourself again. And you're inside you've just traded inside a consolidation from premium or discount into premium off of a reversal that happened right here and here. Does that make sense? Hopefully that makes sense to you guys. Simo Show, old Simo. Simo is here, my second channel I subscribed with it. So Simo must know the Simo Show. Old Simo must know Simo Show. Welcome. If you're related, awesome. Welcome, welcome, welcome. Invest. Not a crash, just rebalancing. Then probability a rip into the new highs. See, that's all speculation, man. All speculation. Rebalance, then probably, listen to the words you're using, probably a rip into the new highs. What if it just kept hammering down? Then there was no probability there at all. Only go by facts, man. Only go by what you just saw right here is facts. That right there was just a rundown into here, and you say the facts are it's probably going to, in high probability inside a premium rate, is it's going to hit that rejection block. Sorry, the mean threshold of this candle, because it's a breaker, it's a senior array, and it's going to kick off of that. I'm going to pay myself right there. And I'm going to move to break even, because if it comes against me, I'm already in the premium array. It's going to run to a discount, and I don't want to lose all the profits I just made. So I'm sitting in a premium or an equilibrium area. I don't want it to get back to equilibrium. If it pays me there, I'll get out completely there, and I'll wait for it to come back to me again. If I get in again and it runs back up there, I'll pay myself again. If it goes below that point, I'll get myself out. I made myself a buffer between the low and my entrance, which is up here. So if it fails here, I'll lose that as my stop loss versus all the way down to the bottom. So now you're looking for a discount array back into here, bottom of that. So now here's a great opportunity to say, now I can catch myself a nice discount and run back up to another premium array again. Now we validated this candle. You're going from here to here. You're inside this range now. So it's compressing. You're inside consolidation. So trading inside consolidations, they was getting smaller and smaller and smaller. And it said, I have to break out. It ran up, took out the highs, ran down, took out the lows, started a whole new range. You traded from discount to premium. And now if you stay up inside here, you want to get up on top of that mean threshold and trade the upper 75 of the range. So if remember the equilibrium's right here. So we're in the premium of the premium, or we're in the discount of the premium right now. In other words, divide that into quarters, and you'll see where you are. Now this has been validated. You're between this candle here and that mean threshold there now. Tap. You're either going to keep coming back up through it, keep pushing higher for the rejection block, eat through this now. You've now validated these two. So I look at these as padding. You'll hear me say the words padding. Oh, that's some padding there now. That just gives me that candle there. As soon as I get above it and get above through this thing, I think, okay, that gives me a bit of padding if I'm going long. If this was your entrance, you got out there and you came back in, you got another one. So you bought here, got out there at the mean threshold. You came back in, you got another opportunity to do the same thing again. You're in, you're out. So you got 2 times you got to collect off of that, just that inversion there to a PD array that is in a senior array and it's in the mean threshold. If you break it to the upside and you got a piece on it, leave there. Take some there. You're in a consolidation, chances are that could roll over and come back down again. And it could take off. Are you going to beat yourself up if it takes off? Or are you going to say, damn, I'm going to snatch that piece of profit right there. I don't care what it does after that. I can't anticipate that any more than I can anticipate companies rebalancing in a quarter. Right? All I know is what's in front of me. Right now, I would have that freaking thing slammed right up tight. And I'd be in profit. Right there, it would have come back and taken me out. But I'd be in profit. And I go, I'm in a consolidation. I still made some money. And I don't judge myself after the fact. Because if it turns around, you go, huh, good thing I paid myself. Or if it takes off and go, woo, well, it's a good thing I got some money out of that. It really left. So watch it go to the rejection block. If it makes it up there, then that's where you'd pay yourself again. Chris is like, gotta go. Have a great weekend. I will see you in a week or two. Chris, I'm gone. I'll be gone for a week, so I'll be back on the 8th. One more day left. So tomorrow, I got a little bit of time with you guys tomorrow, and then I will leave you to March Madness, and we're going into April, the rundown into April. So I'm looking for Invest's idea. I really want it to start to degrade like crazy. On the daily, you got to get below here, though. The 4 hour. 4 hour, right there. You see that? You run back up, a body trades below it, then you run above it. So you're back into, do I give myself a little bit of slack, back up into that order block here, which it did. Rolls over, goes back below it, comes back up inside it again, right here, closes above it. You go, ugh, I'm out again. Oh, now I'm back in again because it's traded below it. You get one more opportunity to load back on right here, right there, right there. 100% load back on, and now you start taking out profits here and here. And you're looking at mean threshold, you're looking at fulfill. Quick ways to snatch some money. Just in those 8 hours right there, whatever little losses you took here, when your fail safe kept breaking you even, you traded above you and went, ugh, I'm wrong. Trades back down, gets you an opportunity to get back out of your trade. Wait, comes back up, enters into your trade again. You get short. Aim for rejection block. You hit it. You don't get the low. You get the rejection block. And it comes back in one more time. You get the load back on your trade. Comes back. Rejection block. Pay yourself. Low, low. Mean threshold is already taken. Comes back up. Now we've got this inversion right here. See that? Body trades back up above it. You come back into it right there, and now you've made 4 hours of up prices. And you're trading from one to the other. So the inversion, even on a 4 hour, you're seeing an inversion working. So I'll show you this stuff every single day, over and over, until you start seeing that there's a level of confidence that you can build in this, even in these crazy consolidation, high resistance shit you see here. Tomorrow's markets are closed. Are they really? Oh, Easter Friday? Is that what it is? Good Friday? It is Good Friday tomorrow. Okay, well, if the markets are closed, then I will see you guys in a week. I'll put this baby to bed and heading out to Vancouver. Cap Nemo. Lucas is out there in Vancouver. You guys should pop in, say hi to each other, go for coffee. It's nice to know the ThetaWave community is coming together, helping each other out. Have some coffee, have some laughs, make some new friends. Make friends all over the world, man. Make friends all over the world. Oh, we're just popping to Vancouver and then taking off from there. We usually stay at there. There's a hotel. What the heck's the name of the hotel? Starts with an S. Can't remember the name of the hotel now. It's the Silvano? Sylvie? Oh, I can't remember. I have to ask my wife. She's at work. Solera? No. Not Solera. I can't remember the name of the hotel. Anyway, yeah, we won't be down there. We're just going to use Vancouver as a launch point. We're going to Hawaii. It's going to be fun. We're doing a big cruise around the islands in Hawaii. Mom and Dad get to go on a vacation with I've been waiting for retirement so I can go on a cruise with my parents, go out and enjoy my parents for whatever years I got left in them. I can go out and enjoy them. My brother and his wife are coming. Carla and her dad. It's going to be an awesome time. Go cruising around the islands in Hawaii. Not Sheraton. Sheraton will be there in the summer. My cousins are coming over from England. We're going to go to Vancouver and staying in the Sheraton down there. I'm out in Maple Ridge. Maple Ridge. Yeah, we'll have to meet up sometime when I come out there. We come out there quite often. We'll have to meet up with Lucas and I'll have a little coffee and a chat. Talk about the markets. Talk shop. I'm sure my wife will love that stuff. Oh, shop again. We're meeting up with more Theta people, are we? Awesome. Man, it hurts being in a stop hunt. Yeah, see this inversion right here? Body trades above it. Come back inside it. There's your rejection block up here. You've hit it. So opportunities to go long here, make some money, come in again. Look at that one. It's right back to perfect entry. You hit it. Go for a long. Again, as soon as it runs above your rejection block, because you've hit this mean threshold multiple times now. Now run for here. Pay yourself. Slam your sucker. Slam that right up behind here now. Let that be your next little pop. Because now if this, your fail-safe would be like right here. Fail-safe's right there. You see that? If we've just run this high out, this becomes an inversion. Right there. See that? Huck how quick that happened. Literally close below you, popped and then kept running. Whoa, that was fast. That was awesome. I was just saying, if this becomes an inversion, if we trade below this and come back to it, it literally ran down there, open, pop up, and then just kept running in a few seconds. It did that run. Now that was quick. We're calling that just before it was happening, and it literally blasted through and then took off. So your stop would have been taken. All that trailing stop loss, you just saved yourself all the profits you're about to lose if this comes back against you now. All this trend line stuff. You want to see it come back up in here and then blow the trend line phantom people out of the water. And what are we trading to? We're trading from here to here. Premium, discount. Inside that range, like array to like array. So as soon as it comes back into that level, or pull your fib tool and trade 50%, 62%, whatever method you want to use. You got lots of arrays sitting inside here, lots of order blocks to bounce off of. Now I bet you we're back into the 50% of that range again. There's 50. If you could have got in on that right away, which I don't think any of us would have caught that quick. Just as it's starting to come down, you're like, okay, I want to put, oh, too late, it's already gone. You'd be paying yourself right there at 50%. You'd be slammed that right up against break even. Take yourself some profits. If it gets to 60, move to 50. This is how you maximize. You put a full 5 lots on there. You keep 5 lots on all the time. So as soon as you get to 50, you move to break even. As soon as you hit 62, 5 lots slams right into 50. Instant profit. And if I trade buck above this mean threshold right here, I'll close out my trade. If you've got just moved to break even and you got a full load on there still. So watch. As soon as it hits 60, slam up to, I'll be there right now. Bang. Now I'm at 50. Now if that goes to 60 or 70, you move it to 62. Right there, you're at 62. You're full profit still. You haven't scaled out anything. If it goes to 75, you move it to 70. There, bang, you're right up to 70. If it comes back and tags you out, right, bang, right there, now you're out. You realized all that profit right to there. Now if this turns around and leaves right now and comes back up, you would have caught the difference between there and there in terms of profit. So you watch now. And see that if that doesn't pay you enough in dividends, inside a range, consolidation, optimum trade entry for reversal, if it reverses off of this. So we're back to this right here. Remember we said trade from this one to this one? We literally traded to the bottom of that and see how it's turning around and coming back up again. That's how you trade a consolidation, using a fib tool to scale you out. You're back into 50% of that range. If you took your max, you loaded on here one more time to go long at the maximum with your stop loss, this is the best place to put an entry, because if you're wrong, you got the best opportunity to get yourself out of a trade before your stop loss gets taken, and then it dips and says, hey, look, I'm heading in this direction. This just came all the way back and said, I'm just coming back into a discount array to run back higher. In other words, optimum trade entry. Now my stop loss would be like, bing, right up against break even on that. I wouldn't even want it to come back against me. Especially seeing a reaction of 50% like that. This is more instinct than Michael's skill or anything he's taught us. This is like, nope, I want to protect my investment. I'm going to bring that right up to break even on that trade. Now if it comes back against me, move to the sidelines and wait for another setup. I get out now. I take the profit and get out now because I don't like the way that's looking. Just because this is an order block right here, you validated it, you came back and you start eating right through it all automatically, so your ass is next. And that's as much as looking at that little candle and that candle. And if you weren't looking at that, there you go, you stop spin taking now. But I didn't like it the moment it was all this. I was like, no, I don't like that. That's not looking good. That's probably going to come back down. And we've already bounced off that 50%. We snapped off of it. Not good. So that reversal to here is continuing on the downside. You paid yourself there. Now if it rips through here, you just, so that's okay. I'll wait for another setup. This breaker here would be nice to get in on. It's a parent breaker of that whole run up. If you miss this one, this breaker here, watch. If you miss this opportunity to get in here, don't sweat it. Wait for the breaker to get taken. The breaker gets taken right here. We trade back up inside the breaker, you get short. Remember, there's two ways you can deal with this. One is look for the reversal. If you miss the reversal, look for the breaker. Look for the return to the breaker to continue down onto the next reversal or the lowest part of your range, which is your rejection block. That's your next little area here. You want to, obviously this order block here, the mean threshold's important. All those levels are important if you look at them. Got to run for a bit and do some maintenance on my computer, running pretty slow right now, so I want to get rid of some of these cookies, history, etc. And if so, if this picks it back up again, talk to you later. Okay, Derek, thanks for hanging in, buddy. Moby Dick, could you trade sometimes to show us examples? I think it would be better for us to learn. Sure. But if you're just going to copy my trades, then you're not really going to learn anything. And me putting a line in here, I'll do this. How's this? There's nothing in here right now. If I put my trade on, then you're just going to copy my trade. You got to, everything I'm explaining is no different than if I put a trade on there. I say go in right here. That would be an entrance to go in. I give you tons of those opportunities to say, okay, you could go long here. Just watch this. And you study price action. Watching my dollar bills go up or exits. If you need lines to see where things are aiming for, then I'll put lines up there, but you don't have to see trades. They don't make it easier for you. It just makes it easier for you to copy. The principles are still the same. You're getting below here now. You don't want to see that climb back up above here. Rejection block. It just fell short of the rejection block right there. Came back into this breaker right here. Market's rhythm never ceases to amaze me. Pushing new high for March 28th. That makes sense too. Thank you. So, what do you see here now, Moby Dick? What do you see here? give me a candle. This is going to help you better than me just throwing a trade on here. What are you looking for? Look at this, where we're at. Look at where price action's at now, and let's use a bit of hindsight to predict where we want to go in the future. Because hindsight, reading hindsight candles and charts, contrary to what the idiots out there say that using hindsight candles is ridiculous. Anybody can do hindsight. Yeah, sure you can. Sure you can. With a level of logic that is persistent and consistent. Let me see it. Show me. Show me how you can go back through hindsight candles and have a level of consistency in your explanation of each one of those things that you clearly see is moving from one point to another. If you can do that consistently over and over, a repetition, then I'd say, yep, for you, hindsight is easy. Because you know the system, you know the arrays, you understand the directions. But if you just go, oh, it's coming back to this candle here and it's going to that candle there, it's so easy to see that it was going to do that. In hindsight, that's not logic, doesn't follow any reason. Tell me what you see here. What do you want to see in order for this to go in a direction that you want to get in? So now you're in this consolidation and you're in an extreme discount and you're just sweeping a low here. What do you want to see? Hello, Victor. What do you want to see here now, Moby Dick? Quick, what do you want to see? I can see it popping in right now. Based on everything we keep focusing on here, what do you want to see happen in the next 2 minutes for you to get long or short? I guess good entry price for long. I guess a good entry price for long. Yeah, okay, so where is your good entry price for a long? Right here. You see this forming here right now? You want to see this kind of thing. You want to see it inside there to there. You want to see a body break above that, a nice body, come back, find support here, all the way down to here. The perfect entry would be right there, because that's where your fail-safe's going to go. Stop loss would go there. Because we've run the lows. This would be the inversion to run back into this range. And you're looking for higher PD arrays, reprice, rebalance, fair value gap, breaker. So keep your eyes on that area right there. Don't trade it. Just watch it. Because if it's wrong, then we want to know where it went wrong. And don't forget, you've got arrays above you. So you want to get up above this, come back down, find some support, and just start blowing through. Like ideally, I'd like to see this come right through those, come back down. There you go. Exactly what I just said. That's what I want to see. But I want to see a body close up there. Watch here. Thank you. Body closing. Off this order block. Don't forget, we're back into this range now. So what you're going to do is you're going to pull your fib tool from here to here. And you don't want the 50% to give away already. And just tapping on it right there. So you don't get a chance to get on it. That's where you'd be scaling out a portion right there, moving your break even. If it hits 60, slam it right up against there. The same thing we did on the way down, you're doing that on the way up. And if you're chasing this, shame on you. You're not following any logic if you're chasing it. Now that would be like right there at 50%. So if it comes back and takes you out, Who cares? It went to a premium array and ran back down to a discount array. But we didn't get an opportunity to get in there. So this was the reversal pattern. It just went straight through it. It's got a lot of legs now. It's got, when it does this and it just takes taken off, it's got a lot of power. So it's running right up inside that range again. There's your breaker. So 70%, I'd be out there. But if you could, you'd still be following it up there. Now I'd follow it up to there. There's 70 and 75. If that makes it to 79 before it comes back and taps you out. So watch there, it'll be tap you out right there. So you hit the breaker. So if it rolls over here now and comes back down, you nailed it right there. Maximum profits, you took all the way up to there if you didn't get taken out on that one. So we saw the reversal coming. I was trying to get you to look at this area right here. As it was forming, you go, ooh, that's taking out those lows. There's a little inversion happening here. If I can get in on that, I'm going to run on that. I'm going to take a run on that. And I'll scale out at those points, pull in my fib tool, or you aim for a PD array, or you aim for inversions. These are reprice rebalances. If you don't know what they are, your eye may not go to these if you don't understand what they look like. So it's just a rebalance of the reprice rebalance. It's a fill, and it's coming right back into this fair value gap here, and right close to the close to your entrance. Remember, we could get in on this one on the way down. This one comes right back up. You trade from one to the other. So if you got in on this one, you trade back to the PD array. So like array to like array, discount array to premium array. Got it? Got it. Muhammad's like, mate, those rejection blocks, reversals really work. It's like, oh, you're starting to see that, are you? You're starting to see it? Holy smokes. Have you discovered the secret of life? Have you? And this is in a consolidation. This is in the shit, marred down in the crap of consolidation. And yet you guys are starting to see it now. From one array to the other array, inside a consolidation, you can start to see it. My friends, the veil is being lifted. This is a 1 minute chart. Hasn't thrown us off yet. We've been on the horse the whole time. It's not going to throw us off. Not going to throw us off. We just keep catching it on the other side. It's reversing direction. Oh, it's reversing direction. This is what's Moby Dick. What are you looking for? Quick, quick, quick. It's about to happen. And there she goes. There's the reversal. So it's not going to throw you off. When you start to see it pretty clearly, you're going to see this thing over and over again. And that's, now you just look at that thing and you go, that's a 1 month chart. We've been in this stock now. This stock's been in this sideways for 3 years. And why is it you're still making money in it? That's a 1 month chart. And you just nailed it right there. You went, oh, I'm going long. I'm coming back up here. For the next 3-4 months, I'm going to catch it all the way right back up there. And as soon as I hit 50%, I'm going to scale out some of my profits. And I'm going to move my trailing stop loss in my stock behind me. I'm going to collect my dividends every month. Whatever. Options trading. You're into options and you say, I'm going to go long right off this inversion here. I'm going to sell covered calls, or I'm just going to buy a call long. And then when it reaches that point right there, I'm out. And I'll buy a long up there for X amount of dollars for X amount of time. And then when it starts running up there really fast, you start going, oof. The faster it gets there, the more money you just made. And then when it gets there, you close your options trade out. Whether this is stock, this is a commodity, this is oil, this is gas, this is corn and popcorn, I don't care, whatever the hell they're selling on there in the market. The same algorithm runs it all. And we had nothing to do with boardroom meetings. We had nothing to do with some company has to get its ducks in a row, or who gives a crap about that lot? Hi, Darren. Thank you so much. Thank you very much for your streams. Your content is priceless. With markets closed tomorrow, If you would still like to stream, how about a tape reading Bitcoin? Just Dewan, yes, my friend, let's do a little Bitcoin action. Look at that, right up into that level. Schmuck. Case is closed. If it goes higher, great. Let her buck. You're on the horse. The horse is giving up, man. You're just riding it back to the stables now. Hee-haw! You caught that run. And we talked about it before it happened. We saw the setup coming. And off we went. It took the hump. We saw it setting up. And it happened super fast. That one was like bing, bing, and then kept running down on us. Yes, Bitcoin. If I'm here tomorrow, I'll do a little bit of Bitcoin with you guys. I'm cool with that. Bitcoin's just delicious and nutritious. Look at this. All the way down. Bitcoin. Broke the low. You can't get back in. Oh, yes, you can. Right there. It finally took all this time for you to get short. If you go from reversal to reversal, there's the reversal. You don't get to go in on that one either. So it literally went from little reversal right here all the way up to reversal up there. Now you can get in on that one to come all the way back down to this one. Pay yourself. This one closed right here. If this one pops up one more time into here, you can get short on that. And pay yourself here and old highs there, or pull your fib tool and do your 50% on the way down. Here's a reversal, pops back up above it, does not give you an opportunity to get back in. Swing below low, pops up above it right here. You get an opportunity to get in on it right there for a run all the way up there to the mean threshold of the breaker inside that range. Like, man, oh man, if you can't see these ranges that you're in and key levels you should be aiming for, instead of gunning for the highs, take out at logical levels. Like, man, oh man, the reversal happens right here. Literally closes. Oh, it's way below it. Yeah. Does not even come back up into it. So you don't get the reversal there either. So close to it there. Don't get it there. Right here. You don't get it there either. This one here. You come back into it right here. You go all the way back, come back down into it right there, and then slam. It takes you straight up and into that. So you wait for these key opportunities. If it comes back to you, you take them. If you don't, you don't. Wait for your perfect setup. If you're looking for that and you didn't get it, oh well, wait for it to come back here. Don't chase it. Just wait. They happen. This is a minute candle. This happens all the freaking time. Here's your reversal. Body breaks above it right here. You come back into it. Your first one's in here and in here and in here. Now you may say, my fail-safe is I'm out here. Or you might go, oh, I'll give myself some wiggle room back to this inversion right here, or this fair value gap here. Comes all the way back to you. Bodies don't break below you. And you're on this huge tear up, or just a tear back to here. Pay yourself, pay yourself. Pay yourself in here. Pay yourself there, there, there. All those different arrays that you keep running back to the next array above you. Next range above, next range above, next range above. Every time we clear out one, go back to your next one and say, what am I going to clear out there? If I go back to my next one, what am I going to clear out right there? Back to this order block here. And you eventually key off that one, come all the way back down again. So yeah, we'll come into, we'll do a little bit of Bitcoin stuff if you want. I got 2 more minutes and I'm out. That's it. I'm kind of hopefully you're seeing it. If you like it, hit your like button. If you're new to our channel and you've seen something that tweaks your interest, even in high resistance liquidity runs like this, super high resistance, This is a mess. This is not for trading. I was just wanted to show you that you can still stay on a horse inside consolidations like this. And if you're bold enough, you can take some demo dollars out of that and still make a little bit of money inside it. The logic is still there. The reasoning is still there. And if you're swift and steely-eyed, you can snatch yourself some profits. But you got to be fast. If you get taken, you got greedy. You overshot your arrays. It's not that something failed in here. You failed to see something. That's all. Or you chased price, or you got greedy, or all the classic things that the algorithm doesn't show you. Now, what are you saying? Here's your setup. Are you ready? 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 Don't trade it. I know you guys want to trade this. Just watch it. Practice. Does it do what you want it to do? And if it comes back in there, don't go, I should have bought that. I could have made money. Because then your focus is on what? Money. Not on trading. Not your setup. This is the time you focus on this and really get a good feel for. I got my light on here. I don't even need this. I don't even have a video on. It's your opportunity to practice this right now and don't gamble it. Don't gamble. If this turns around and takes off right here, there, see how you close below it? Right there. Doop. You're popping into it. There and there. If that turns around and runs through you here now, have your failsafe right there. That's a failsafe. So you put your failsafe right there. That's the perfect entry for a short. Stop loss is here. If it runs through you, no big deal. If it comes to here, you pay yourself a piece right there. That perfect entry pays you right here. Then slam up against spray. I'd be like right in here, right on top of that. I'd be making money and making money. I'd take some there, pay yourself. But just play. Just try this out as a play. You pay yourself right there. Now it's your stress-free trading. Let it go stress-free. Right? Understand that? Thanks, Glenn. Appreciate it, man. Right inside that small range, you paid yourself right there, and that rejection block, you got in there, you paid yourself there. That could be $100 to Simo, to Glenn down in South Africa. Man, that is $100, $200 you just made from there to there. And that's 2 minutes. That 1 minute candle, you made it all the way down to there. In 1 minute, you paid yourself $200. Jesus. And then you came back and started it all over again. And now you're paying yourself again. There's so many arrays on the way down here. I'd have that sucker like cranked right in here now. I'd have zero stress and just let that thing run. And you're aiming for discount array. So pull your 50% of your run here. If you get 50%, then you can move it to break even. If you've got the whole lot still riding on this and you didn't pay yourself there, then as soon as it goes to break even, or 50, move to break even. If it hits 62, slam up against there. Now you've really locked in a massive chunk of profit. There you go. There's 50. Boom. Pay yourself. Sumo. Colby Hemming. I'm ready, Freddie. I take it. I made 100. There. He just made 4 days worth of wages in 1 minute, 2 minutes. For that guy, that's a lot of money. And then he ends it with that terrible sentence of, I was always afraid of taking this consolidation. There's no reason to be afraid once you understand what the algorithm's doing. You got to be super sniper though, and Simo, you're taking the trade just because I was telling you the setup, and I don't want to feed you for the day, man. I want you to learn this so that you feel comfortable that when you jump into that, you're going zero stress as quick as you can. You're coming down now, and you're about to hit slam. If you're break even and zero stress, as soon as right there, bang, you just nailed yourself. Huge profits. If you had 5 handles on that or whatever, you're 100. Now, as soon as it hits 70, you'll come bang. And we're aiming for here. Don't forget. Bang, you're done. Have a nice day. You've moved from there to there. Trade completed. If it's still running down now, 70%, if it taps at 75, 78, hit the 75, and it's going to be literally going to come in and tap you out right there. Right there. There's 79% retracement. Now, if you're at 75, it's just going to tap you out. If it hits 70, 88, if it keeps running all the way through, you just keep trailing your stop loss all the way down. So there, you got taken out at that point. Big rundown. We were calling this one before it happened. We called this one before it happened. You're welcome. But hopefully you get to see the, and we're inside a consolidation. So who says you can't trade inside a consolidation? Now, Simo, are you saying to yourself, oh, I should have left it on? If you did that, you're trading for money. You're not trading a logical plan. What's going on in your head right now that this is taking off? Are you saying, shit, I should have got in on that. I should have listened. I should have. No, that's not what you want to be saying to yourself. You've high-fived yourself right now. You say, I caught the beast from there to there, and then it kept running. I paid there's money in my pocket right now. You could dance in the streets. Do not judge the decision you made here on this. That was a logical level for you to get out inside this big consolidation. You didn't know it was going to run those lows. You didn't know that at all. But you traded inside a range with a level of confidence that you got to zero stress. Like, I want you guys to get to the zero stress trade. As soon as you get zero stress, then you get super comfy. You guys are going to see this stuff so differently now. So differently. What are my overall thoughts on trading the lunch hour session? Well, Michael says don't trade a lunch hour session. If you're new to ICT Concepts, follow his rule. Don't trade lunch hour sessions. They're consolidations. Just because I'm showing you here how I trade a consolidation on a reversal pattern, or I'm trading in a range, if you don't understand his PD array matrix, you're going to get your ass handed to you. You're going to get beat up so bad. You're going to chase price. You're not going to watch it. If you start to let your eyes drift off the charts just too much, and you come back here 5 minutes later, if you don't get a really good read on where you are inside your range, whether you're in a premium or discount, or what you are in a larger range further back, you're going to get your ass handed to you. So you really got to watch candle to candle, array to array, like array to like array, all that kind of stuff. If you don't understand his concepts, go study them. Don't pay for them. Go study Michael's stuff under his charts, under his knowledge base. Then come here and we'll show you how to apply it. If you're new to our channel, hit subscribe. Hope you have enjoyed today's session running around in consolidations and how to trade a consolidation using ICT principles. with that, my friends, I'm out of here. I'm going to go and have myself a shower and take on my day. Go out and enjoy your day now, you guys. Or practice and demo, practice. Do not go live trading this until you're 100% confident about it. Simo, stop trading live money if you're not ready. If you're running in fear, the dopamine hits you're getting right now are they're really enticing you to gamble, and you don't want to do that. You want to have zero emotion. When you get into this, you say, here's my setup, I'm going in here, here's my fail-safe. If it fails, I'm out. I'll wait for my next setup. And just keep doing that over and over again until it becomes, like Michael says, boring. After a while, you start to see it. So please be careful, my friends. I wish you all the best. I'm going to go out and enjoy my life now, as you should, now that you've been in the markets a little bit. If you've made some money today, share it with some people who are in dire need of some help. There's lots of people around the world that need it. Or just take your family out on a vacation, go somewhere, do something nice for some people, make somebody smile, make somebody laugh today. Simu's going to be out there dancing around in the streets right now. He's made himself 4 days worth of wages. So stay focused, my friends. I love you all. I see you again on in the first week of April, or after the first week of April. I will see you then. All the best.